Alrighty. Doc here from North America. Good morning, good morning, good afternoon, good evening. It is Friday. The world is pretty much closed. U.S. markets are closed. We do have currencies. Let's see. Let's jump over to an intraday currency. You'll be able to see it because, or daily, we can see either one of them at this point. But. Let's see. There is the Swiss. There's the euro. So, woo, doggy! Look at the way that thing popped. The news is out. And see what the news is. Good chance of no rate cuts this year. Another one saying this again. What it's like how we talked about it yesterday. Is the Fed like now taking over Alexander Hamilton's ability to be the number one insider trader in our quasi government agency, whatever you want to call it? Here it comes now, and so you can see how the when that jumps like that, it means interest rates are going up. Okay. Okay. So everything was where they expected. Ah. Consumption was zero point 0.8, and February personal spending was zero point 0.8, and estimated was going to be zero point 0.5. So that is a sign of a hot economy, and that's why the currency made the. That's why the euro. This is an intraday chart. Why it made a jump because it's people were people are spending more and working less, and that's not good. that's and so to lower rates. Let's see. So February core price on a 12-month basis was unchanged. Now the bigger question is that they don't really pay attention to the one I look at, the base. Okay, February personal income was zero point 0.3 versus zero point 0.4. Okay, so I guess they adjusted the February. No, I guess I see what it is. It's still going up. That's what the problem is. So in other words, it might be moving. It might not be exploding up anymore, but it's still going up, and that's why they pushed the euro right there. Let's just show you. Let's show you. Let me entertain you. Let me make you smile. And you can see right here, when the number came out, the euro perked its head up like that. Now let's go over and take a look at the euro on a day and weekly basis. Right. Nope, not there. Right there. Oh, okay. So the revisions. That's the problem. Is that they seem to make the number look okay now, and then behind us, the numbers they gave us are wrong all the time. It's like the classic insider trader. Now, you can see here, this is the euro. This is the euro dollar pairs trade. You can see it's definitely going to be closing in a sell on a weekly basis. That is saying basically that currencies or interest rates are going up, not down. Now let's see if we can do this. See if there's any interest rate out there I can find live. And so that's there. So we're basically closed in a weekly sell. They're not changing that. You can see this is from across from each other at this point. So they were lifting it up and then they knocked it down. Now let's go back to the intraday right there, and you can see that they're not letting go of it. See, when this goes up, wait a minute. When this goes up, interest rates are going down. That's what they're saying there. Okay, that's better. So when this is going up, interest rates are going down. So it went from what did it do? It went from a 1.078. We'll just go like that. One, or we'll call it 2.0782 up to what was the high? The high was 1.07995, I guess. 0795 from 9.2. Just a couple. Actually, it's not that big a move. It's you're talking about 78, 78.50. Oh no, I don't know. It is. It's a full handle. It's definitely a big move. All right. So the first initial feel was, oh, interest rates could come down in the States. And so people buy less dollars, they buy more euros. And so that's what that's trying to tell us there. But when we go and look at it in a daily and a weekly right there, it does seem to be firm. There's no doubt about that. It's above yesterday's close. It's definitely firm. They were knocking it down. I guess what we'll have to see is the revisions over the next couple, the half hour, that type of thing. We'll have to try to get a flavor for it all. Let's see what the cable is doing. We really want to look at the big currency. Yeah, now the cable. Let's go to the intraday on the cable. Intraday on cable right there, and did the same thing. And it was the news came out right. It came out right here. I guess it's right here. 7:30. We're at 7:35 now. So 7. Let's see. Time 7:41. No, it can't be 7:41. 7:31. What's this now? Okay, so it's 8. So it would be 8:30 right here. That's where the news came out. Let's put a little box there. That's where the news came out. And it's climbing strong. Now that's interesting, is the cable's acting much better than the euro. Right. Where's the euro? Right there. It's not taking out the high yet. So it went from let's see. They took it down. I guess they were anticipating bad numbers. And okay, so yeah, I mean, look at this. Somewheres, that's the European Open there. And then, or maybe European Open, because I think markets are closed pretty much in Europe at the same time. So what we're seeing here is that the internals just don't look right. In other words, and they keep on adjusting the past months every time, and then so they satisfy now, but they don't satisfy. This month, February's numbers are not as pretty as let's say January's numbers weren't as pretty as they were supposed to be. And I guess that's what the problem is. Now, I'm a little surprised that the euro is underperforming compared to the cable. But maybe just, the continent and its economy more. It may be economic. They're both gaining against the dollar at the moment from the news. A little sip of the coffee here. And let's see how the yen is going from all this. There's the yen. And it's gaining against the dollar too. That's what that whole move is. It's going down. It's gaining against the dollar. And then let's go take a look at it on a daily and weekly. There it is. And you can see here it's trying to turn down nicely. But the weekly held on. Here we are at the end of the week. It held on. It's staying in a weekly buy for another week. I saw an article this morning. They said that there was a Federal Reserve chairman. His name was Arthur Burns. He was I guess he was like Lyndon Johnson, John Kennedy, and Richard Nixon's Federal Reserve chair. And Arthur Burns, when inflation got going, after they got off the gold standard, they tried to lower the rates to perk up the business economy, and and that's basically what freaked out the markets in a sense was that the inflation got going, and then Jimmy Carter became president, and it exploded from 3, 4, 5%, which they thought was outrageous at the time. It exploded up to 21% when Mr. Carter left office and Mr. Reagan came into office. Inflation was up to almost 21%. 21. Now we saw it get up to about 10%. The former president of Harvard and what's his name? Bill Clinton's Secretary of Treasurer. His name was in my head a few seconds ago. Now that I've thrown out those other names, basically put out an article. We talked about it here about a week and a half ago, 2 weeks ago, and he said if you took the statistics of the Bureau of Labor Statistics doesn't follow the same stats as back in Arthur Burns, Richard Nixon days and Jimmy Carter days. They don't follow those stats anymore. They've changed those stats around for measuring inflation. But he said when he went and looked at the inflation numbers using the old statistics, in other words, using the statistics they used back then, he said that we were at 18.5%. Almost 19% inflation. So we're basically at the same level of inflation as we were during the worst of times under Jimmy Carter and at the beginning of Ronald Reagan. And then obviously Ronald Reagan, over his 8 years, knocked inflation down 50%. It went falling down into the 12s or 10s or something like that from 21. So that's kind of like where we always stand when we're trying to understand the inflation market, how to understand what's going on, and so pretty much we are probably in the same boat. So now that they have it, now this is what he said when it was. He says now inflation is around 9.5%, 10%. So it's drifting down, no doubt. It's coming down from basically 18.5, 19 in old terms. But it's not, it's not great. In other words, it's at around 9.5, 10. I think he said it was 10.5% now. That's where he has it at now. And so, it's an interesting concept to look at. In other words, the Bureau of Labor Statistics, someone changed it during the, was it the Mr. Obama's years? They changed it then. I think they said they moved it in 2009. 2010, they changed the stats to measure, what do you call it? Measure inflation. And so I can hear his name now. His name's something. What was it? I can't think of the Secretary of Treasurer's name now, but I just heard it go through my head. So, in the end result is that Powell has that in his back pocket. He does not want to be known as someone who lowers rates and then watches the inflation explode up again over the next 6 months. So the idea that, let's see, where we're at now. Basically we're April now. So May and June. So we're talking about 2 full months from now. And so, all of April, all of May, and then the first 2 weeks in June. If he if he lowers rates, what the government wants, the president wants it to be lowered. If he lowers those rates, and all of a sudden by August or September, you would have most of June, you'd have all of July, would have all of August, you would all have September. You'd have 3.5 months with a month with 5 weeks to go, and that the inflation will explode. It'll pop up because of lowering rates, and so he doesn't want to be known as the one who does that. And so that's the only thing. Now, what is amazing, due to the fact that our media is so, wow, how do you describe our media in this country anymore? It seems to be out of control. I guess you could say our media is totally out of control. It doesn't report news anymore. It kind of promotes policies. That's what it does. It promotes policies, and so the action in the central banks, since central bank now is the buyer of last resort at this point. It's become the major form of investment in the world, not just America, in the world. It's American interest rates are, here we are on what is considered one of the deadest days. Matter of fact, it's the deadest day in trading every year for centuries. But here we have, let's go over to the intraday again, and that's the yen. Seems to do a little bottoming there. Let's go back to the number 2 currency in the world. That is the euro right there. You see it's slowly okay, here we go. That's the euro. So what they did is they exploded again. So it exploded there and exploded there. So it's saying that interest rates are coming down in the States. That's what it's trying to tell us. Lower interest rates. And the question is, by the end of the day, are we going to be sitting back down in here? In other words, will it find a way to roll over? Will that roll over and we'll find it parked down in here again? And I guess what they're doing right now is, analysts are going through all the data that's been released. The headline numbers are like, oh, you can lower interest rates. Things are all right. But it seems to, I guess it would have to break this. I wonder let's see what the dollar is the number 1 currency in the world. The euro is number 2. Who's 3? Yen is 3. We've seen yen doing what it's doing, but I want to see cable, because cable was looking very good. That's the 4th most active currency in the world. Okay, so look at that. It's kept on climbing. We went into a buy there, and it just is climbing. And it's climbed up to 126.35 from 126. Was that 13, 14, something like that? 126. Where is that? 126.20. But right here, that's 15 right there. So now we've got this thing going like, exploding up even more. And the cable's looking pretty firm out of it. So we'll see how it even is trying to get into the sell. Let's go like this. As you can see here, on an intraday basis, it went into the buy. 1, 2, 3. 1, 2, 3. How cute. So it went into the buy right here. Let's put a little line in there. It always fascinates me when it does that stuff. So, oh no, that's 1. No, there's 1. Where's 1? That's 1. That's 2. This is 3. So it went into the buy right here. So that's where it went into the buy and took off. And it's telling us that interest rates are coming down in the States. If this thing, by the end of the day, if it parks itself down in here, then they've kind of like walked away from what they interpret. And so we'll see. But I wonder what my core rate is. I'm talking now, so I'm not looking at the numbers. I'll find out the core, which I take. The way I do core rate is I do the last 3 months, and then I go to the 12th month out, and that's my average. So now I'll be looking at December, January, and February, and then taking, let's see, where are we at now? 12 months out. That would be February of last year, of 23. I'll be looking at February of 23, also at the same time, 12 months out, and replacing the January number with that, January of 23. I do those 4, and that's a really popular way of doing it with supply side economists. they believe that that's a really true. No, because you're trying to understand what the inflation is for the quarter, and then look at the 12-month period at the same time. So, it'll be interesting to see how that plays out. But I would imagine it's going up. I doubt it's going down. And it looks like the numbers in the back there, taking out January of 23, taking out February 23, taking out March of 23, and March, and what's the other one? April of 23, is going to force the thing to go up, in my view. Not the way they're looking at it with the 12-month, or what they call 12-month over year. So, and I thought that today, that's why I wanted to do this webinar for at least 35, 40 minutes. I wanted to do it because I thought it was a very important way of looking at what we're really staring at every day. Why I come up with headlines like the Fed is the best insider trader. I mean, that's phenomenal. The worst part is that they've always been the number one insider trader. Problem is that they never were involved in the markets on an hourly basis, intraday basis. They're always more involved in a daily, or more like a week-to-week basis, month-over-month basis. They were involved in. Sometimes it was quarter-over-quarter. In other words, that you could go a whole quarter not hearing anybody in the Fed speak whatsoever, and they would do their adjustments through what they call repos and so repurchases, and so they would go to the private banks and they'd say, you got all these bonds sitting there. How if we buy those bonds? We hand you a bunch of cash and you go and invest it. Someone comes in to get a loan. If they fit your parameters, give them the loan because you'll have all this extra cash. And then when they felt that the economy was too firm, what would they do? They would go to the banks and they'd say, look, we got all these bonds. We want you to buy them now. We want to pull some money out of the economy, cash out of the economy. And they would do that. And they would call that taking the punch bowl away from the party. And so, we don't always, during a trading day with it live like this, and we got, traders paying attention to the marketplace all the time, it's hard to have a mild relative conversation about it all. And so I thought, geez, today would be a really great day, And yeah, and so in let's see, and so what you get is a little bit more relaxed ability for us to look at these numbers in a more realistic way, because they try to really push us. They really do. They really try to push us. They try to make us, not understand everything that's going on. Like, they talk about unemployment dropping or staying low, but at the same time, they don't talk about the fact that most of those jobs that are people each month that are being hired for are government jobs. So in other words, it hurts the economy. It doesn't help. But they try to treat it like it means something. The president comes out and says, "Look at that! The employment's going down even more. It's a record. My policy is great." And then everybody's living through it, and they're like, "No." I mean, something like 7 out of 10 people in America think the economy is in really bad shape. It's not in good shape. People have been getting pay raises, and about 15% in pay raises. Problem is that everything has gone up 18% in cost. So in essence, if I hand you $14, or let's put it this way, if I hand you $14 and then next day I go, okay, you owe me $18, are you better off or not? Obviously not. I mean, you all of a sudden, wait a minute, I gave you $14 yesterday. Now why do I have to pay you back $18? In other words, you're losing money. And so, that's the problem. And during the former president that was before Biden, it went the other way. People were making something, and it was crazy. It was like they were making something like 7% or 6. I guess it was like 6% in pay raises, and costs were 1.5%. Yeah, I'm going to say that again. So under the previous president, which was only 3.5 years ago, people remember that they were getting pay raises of like 5 and 6 and 7%, and the costs of the same things today back then were 1.4, actually to be exact, 1.41%, and so now they're 18.5%, and so doesn't matter how much you get a raise for. If your raise is not greater than 18.5%, you're losing money. So in other words, it's like taking currency, putting it in your pocket, the cash itself, the bills, and then taking it out of the right pocket and putting it in the left pocket, and then claiming that you have twice the amount of money now. You had 10 in your right pocket, now you have 10 in your left pocket, and it's like, oh, you got 20. It's like, no, I have 10. And that's what the president is doing. He's basically telling you that the amount of money that you're making is better than ever. And the problem is that the cost of it is almost 3% higher, which means the average American is losing $2,000 a year. And under the previous president, they were making a little bit more than $4,000 a year more. And so that's the whole wildness of it all. That's the crazy of it all. That makes us like shake our heads and just an amazing thing. Just an amazing thing. So let's see, where are we at here? You can see there we can still look at the intradays. When we go and look at the daily, let's see what the daily. This daily looks. Let's see, where's cable? Right there. It looks like it's up a little bit. It's not exploding. It's trying to get into a buy, as you see right there. But it looks like it's going to close in a weekly sell, too, unless they really take off. And so if it's going down, it means that the longer-term investors or traders think that interest rates are rising. They're not thinking that they're going down. That's pretty much what it comes down to. Now, next week it could flow right back into a weekly buy. I mean, we came in with it in a sell for a bunch of days, and it was in a sell yesterday, and now it's trying to climb into the buy. Let's do this, save. And then we'll go look at the euro again. There's euros still picking up. Euro is still lifting up, but it's closing in the weekly sell as we speak. Now we go back into that intraday on the euro. There's right there. So it seems to have calmed down again. Maybe what they're going to do is they're going to give it another jack on the upside like it did here. So it did it there. It did it there. Might as well just make that whole thing. Let's see if we can go like that. There we go. And so it's jumped up. That's like an A, B, and a C. And then maybe this is one big A, and this will be a B, and then that'll be the C. So this could be the way, the markets are trying to perform at this point. It literally could be that. Let's see if there's anybody on the chat line. Did we get anything from chat line? No, nobody on the chat line today. So, yeah, and so there is the euro. And again, we'll go take a look at the yen. There's the yen. Yen is, this was a positive for the yen. This move here. That is a positive, that's for sure. In other words, when the yen is going down, it's gaining against the dollar. And now, wouldn't surprise me if we find ourselves settled up in this area today. It's a slow day. It's like I said, it's for us in the United States, it is. We're not even. Let me just show you the. Let me do this. Here we are in the United States, and it's a major day off for centuries now. Here we go. Here is the S&P 500. You can see our stock market's not open. They're not even trading it electronically. Where's it at? Right there. See, it's closed from yesterday. No trading whatsoever. I mean, usually there's an electronic market. They turn off for Good Friday. They turn the market off. They turn it off totally. And most of the world does too. Most of Europe and so forth, I'm sure, is kind of quiet. And, if it wasn't for this, let's see how this came out. Let's go like that. Let's see what some of the press is saying about the numbers. Because it doesn't look bad at the moment. It looks okay. This inflationary path stalls as non-durable good prices spike, but supercore PCE slides. As spending far outpaced incomes gains in February. That's what we're talking about there. I'll read it again. As spending far outpaced income gains in February. And that's what we were talking about. That's the problem, is that it's inflation. In other words, it's making people's salaries go up. Problem is that the cost of those items are getting expensive, which could explode. That's why the stock market is not backing away. It's holding up strong, and you're wondering what's what with this, because we're not doing well financially. So the reason is that money's looking at the stock market. They're looking at the idea. Right now, Mr. Trump is ahead of Mr. Biden in every direction. It's historic in nature. We've never seen a sitting president this low in popularity, and his opposition is the former president. And so that's very unique, enormously unique. And Mr. Trump got more votes than any other sitting president in history. And now we're watching to see in this election, does Mr. Trump get more votes? Oh, you know what? It could be the same way again. In other words, it could be that Mr. Biden will get more votes than his previous election. But the thing is, I think Mr. Trump is going to explode. There's the numbers now. Trust to do a better job in issues. Climate change. Okay. That's important. All right. Election integrity. What's this? This doesn't make any sense. Okay. Yeah, so immigration and an economy, it's like 40% for Mr. Biden and 38%, but it's like almost 60% for Mr. Trump. Yeah. And so that's where we stand now, traders. What else can we say? Let's see, what else do we have in the news here to see as it plays to it. There's a really good article. Is it right there? That was an hour before it came out. It says Asian stocks gain with U.S. and Europe closed ahead of the core rate. Let's take a look at on the beta and take a look at some of the foreign markets. There it is, right there. Let's take a look at the Hang Seng. I know that here's the Nikkei right there. You see it's pushing up right there. It's a little wild looking there. And you can see in buys and all like that looking strong. Let's take a look at the Kospi in South Korea. Let's see. Kospi. That's Taiwan. Right there. There we are. Now you can see there the Kospi it's up for the day. You can see that. So it was showing that strength also. But it's off of its highs. And it ran up to this high here, but it's still closed out nicely, and it's in the buy right there. Then let's see what else we got going on. And in the weekly too, same thing. Weekly stayed in a weekly buy. Then we go over to the Taipei index, in Taiwan right there. The chip one, and you can see that also did the same thing. It showed the strength. So they're showing the strength there. You see it's in the buy again and a weekly buy there. Then from there we jump over to the Nifty in India. Same thing, lots of strength there. Oh, look at that. Nice. It's holding up firm there too at the same time, lifting up. Then we go over to all ordinaries in Australia. Same thing, moving up. Now that's yesterday. They didn't even trade. It was closed today. So a lot of these Western, more I guess you would consider Australia part of the Western economy. It's part of the Commonwealth. Now, I guess Commonwealth countries are all shut. And you can see the buys are still there. Then we drift over to, let's see what Hong Kong. Hong Kong used to be part of the Commonwealth. And I'm not now it's part of the main economy in China. There's Hong Kong. Did they close that too yesterday? Let's see. Yeah, so they didn't trade there today because it's still part of the tradition of the Commonwealth. And it's holding up in its buy, and it's jumping in its weekly buy. And then from there, let's see, how do we do this? We go to, where do we go from here? Let's see, we go to, right there. Let's see. Let's go to the DAX. DAX is probably closed also. I can't imagine it being open. Yeah, it's closed. And I don't think any of the Western or countries are really participating in the marketplace. Let's see what the French are doing. French are the same way, closed. There, and then FTSE, of course, is closed. Same thing. And then there might be an electronic market actually reflecting FTSE. Huh. Let's see, what else is it? Let's go, and obviously, like I showed you, we can show you over here. Well, we'll do it off of this thing, but I'd rather do it off the main one. What else is there left? Huh. All right. What else can we do about it, traders here? Does anybody see anything they would like to look at? If not, I think, 40 minutes of the market, that's pretty much what was the objective in my head. I thought we'd do 40 or 45 minutes here. And so we can take a look at the currencies. We'll jump on them, and then we'll call it a day, and then we'll talk to you all on Monday. Our markets are open. We'll see how they treat the action. It'll be interesting to see. You can see here it's stalled out and not falling at the moment, that's for sure. That's the euro. There's the cable. Same thing. Cable's looking very firm up in here. It looks like they're not going to give it up. The yen, same situation. The yen is hanging out down here and looking comfortable. They're all comfortable from their gains today. There's the Swiss, same way. It moved down. When it's going down, it's gaining against the dollar. It's down at the bottom end of it. So what is that? That's 4 of the currencies right there. And so when we go over to right there, you see they're all firm on a daily basis. There's the cable. There is the Swiss. You see that? Actually, it's trying to get into the sell there today on the Swiss. That's interesting. So it's gaining against the dollar. The yen doing the same thing. It's been, kind of sideways down for a couple days here. And it went up, touched a 40-some-odd year high. Let's see what there's interesting there is that this is the Turkish lira against the euro. And it is flirting with a daily sell as we speak. But, again, it's closing out the week in a buy with not much fear or trepidation, I guess you could say. You can see here 3 days of the the Canadian dollar against the American dollar, gaining against the American dollar right there, but still in that weekly buy. And South African Rand is gaining a little bit against the dollar. And and let me show you this. Look where they sent out gold last night. It's not trading live today here in the States. But there's yesterday's close at 2,254.80, another all-time high. Huh. They're talking about one of my friends on TV. Huh. Interesting. Okay. So, and let's see, like there's silver. Silver hung out in the $25 area. That's nice. I mean, geez, things 50% off its all-time highs. What else is there? I guess that's about it. Let's take a look at copper. Look at the copper this morning. There's the copper. It just parked itself in that area. It's a green and a red 2 days in a row. It's been in the sell, but hasn't really fallen much. It stayed in the weekly buy. And then we'll take a look at platinum. There's the platinum holding up. That's how it went out yesterday, showing the strength and the weekly buy right there. And then we're seeing over in the energy sector. Look at that. This is also closed. They're not trading energies here in the States either. 83.11. And I think was it the Brent? Let's see if we can put Brent up on the beta. Where's Brent? Brent. There it is right there. No, that's not Brent. That's the bond. There it is right there. And Brent went out. We're going to show you this real easily. Right there. There's the Brent. And you see it went out at 67.45 in a buy and a weekly buy. Just all that action. Nat Gas right there, same situation. Actually, what is that? That's the 28th. Okay. Looks like there might be some electronic market trying to interfere with it. It's hard to say. And then last but not least, we take a look at the Spanish stock from yesterday. Right there. And so you can see there's a couple lines there. So something's going on with that. It's odd but true. Bitcoin showing some firmness still in a daily buy and in a weekly buy. All right, traders, that's what we wanted to do. We wanted to get at least like 45 minutes into, to tell you about what has been going on. We're going to, I think we're going to stay with that theme about the idea that the Federal Reserve is a very manipulative competitor. I think that's why we're going to look at it that way too. It's not, unfortunately, it's not the Federal Reserve of old. It's a totally different Federal Reserve. It's a participant in the market and competes with the private sector. So they don't let much in. That's why we see something absurd like it's hard to believe anybody would be shorting platinum or selling platinum and making it over 50% cheaper than gold. I mean, that doesn't make any sense to me. And the only thing that I can figure is it's got to be the Federal Reserve, because it surely isn't anything else. Let's see. There we go. Someone put a cartoon up on the Skype that we use as internal communications for Dukascopy. So, let's see. Title. Today's title will be Fed dominates markets, I guess. How did I say it before? I said the Fed competes against open markets. That's what it is. Fed competes with markets. That's what it does. Fed competes with markets. And I don't think anybody would deny it at this point. All right. So, everybody have a nice weekend. Markets are basically closed, and we all get a chance to... We're getting sunshine here today. We can't complain. So, this is Doc from North America, and we will catch you all tomorrow, same time, same channel. Not tomorrow, I'm sorry. Monday, same time, same channel. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Have a safe and smart day. Ta-ta for now.